Guys, the stock market dropped again this week, and now we've just hit something that we haven't seen in years, which is 5 straight weeks of losses in the stock market. That's the longest losing streak in nearly 4 years. And it's not happening randomly. You've got rising oil prices up hovering right around $100 per barrel. You got fears that the war in the Middle East with Iran could drag on, and you got inflation expectations that are starting to creep back up, which is why the Fed didn't lower the Fed funds rate a couple of weeks ago. So the real question for us is simply this. Is this just a simple pullback in the stock market, or is it something that's bigger, starting to build up? So let's talk about on this video what this actually means and what we should be doing about it right now in our own personal financial life. Now, here's what most people miss. A move like we're seeing right now doesn't happen because of one headline in the news or one thing that the president did, right? It happens when there's multiple pressures starting to stack up at the same time. Think about it. A higher cost of oil per barrel means a higher cost for oil and many things across the board for almost everything that we can imagine. And the geopolitical tension, that's a big, big problem because the stock market always hates uncertainty, okay? And when you got these things happening all around us at the same time, it doesn't just impact the stock market like we're seeing. It starts showing up in our everyday lives. Look, we feel it at the gas pump when we go to get gas to go to work every day. And we feel it in the cost of groceries. Remember when a whole basket full of groceries was $100? Well, that ain't happening, right? And we also feel it in the cost to borrow money, interest rates that we have to pay. And now, check this out. We're starting to see consumer sentiment drop even further. What is consumer sentiment? It's just how we feel as consumers about what's going on in terms of prices and the economy, etc. And all of us, frankly, right now, guys, whether you make $20,000 a year or $200,000 a year, we're all feeling the pressure. And on top of all of this, major indexes are now getting closer to what we call correction territory. That's a 10% drop in the stock market from a recent high. Now, let me give you a little bit of context in terms of everything I'm talking about, because when people see 5 straight weeks of the stock market going down, it really feels like something's breaking, right? That's when people really start paying attention. But here's the deal. Markets don't move, the stock market doesn't move straight down in a line. It never does. Even in strong years, you're going to get pullbacks here and there. You're going to get weeks where everything feels negative at the same time. That's not a flaw in the system. That's just part of how this whole economic system works. And we're seeing it right now. The problem is this. Most people only feel confident when everything's going up and everything's looking good and stocks are all in the positive, in the green, right? And people only get nervous when things are all going down. And that shift from confidence to fear, that's where a lot of people end up making bad decisions, okay? But if you're a disciplined investor, and that's where we want to be disciplined, you understand that this stuff just happens. The fact is, guys, what we're seeing in the stock market right now is where a lot of people start to panic. But the beauty is, it's also where a lot of disciplined investors can sort of separate themselves. And we want to be on that side of the table. We want to be a disciplined investor. The market going down is not what destroys wealth. Bad decisions during a down market is what destroys wealth. And let me be clear about something. This is not about being reckless. I'm not telling you to be reckless. Hey, put a whole bunch of money here when the market's going down. And it's not about ignoring the risks that are out there. What I really want you to do is understand the game that we're actually playing in the stock market, because the stock market will always test you. That's a fact. And it's going to test you not when things are easy and everything is going up, but the stock market is going to test you when things get uncertain like they are now and everything is going down. If you're trying to be out here in the stock market doing a bunch of trading or trading every move, this type of stock market environment may destroy you. So I don't want you to go there, okay? But if your plan, which most of our plan is to build wealth over time, then this is just part of the process. The market's going to go up, it's going to go down, it's going to go up, it's going to go down, right? But here's the problem. A lot of people say that they're long-term investors. Yeah, I'm in it for the long term, until the stock market gives them a reason to prove it. like we see right now. So before we even get into what we should be doing right now, I want you first to ask yourself a question, one question. And most people don't like this question, okay? What kind of investor are you? Are you someone that has a plan, has an investing philosophy, and willing to stick with that philosophy even when the stock market's down like it is now? Or are you somebody that's reacting to the stock market in real time? Because the stock market is going to expose that type of person quickly. And the market doesn't care about what you intend to do. The market only reflects what you actually do when things get uncomfortable. So let me answer this question, because I always like to, in a video, give you something practical. What should you actually do with all of this information and looking at the stock market right now and how it's gone down in the past several weeks? First, don't confuse a bad stretch like we're seeing with a broken system. That's two different things. Yes, what we see right now in the stock market with the pullback and the stock market being down, it's serious, right? 5 straight weeks of a down stock market is nothing to play with. I get it. Oil has jumped up. Inflation concerns are starting to rise again, even more. And the stock market is starting to price in a tougher path for the potential of lower interest rates from the Fed, right? We know all that, right? We know that when all that is happening at one time, it's going to create some pressure on all of us that are invested, not just in the stock market, but it's going to create pressure in how we think, how we decide, right? The choices we decide to make with our money and our investments. But this is exactly where people make their biggest mistakes too. People start reacting emotionally and they stop investing. They just start reacting. Right? People start trying to guess the next move of the stock market. Is it going to go up? Is it going to go down? People start thinking, oh, should I pull back, take out some money and move it over to precious metals, right? Should I wait? Should I move to cash or bonds? And on the surface, all of those thought processes feel like smart questions. But most of the time, guys, those are just emotional reactions dressed up to look like some type of strategy. Because the truth is this, if you don't have a clear plan for your money, your investments, before we start getting this down market, then you're not going to create a good plan in the middle of it. And that's how people turn these pullbacks and this volatility into real long-term portfolio damage. If you're a long-term investor, your job right now is not to panic. Your job is to simply stay disciplined. Your job is to stick with the system that already accounts for moments like this. And this is where your financial structure matters. You gotta have a structure, not your opinions, not what you think the stock market's gonna do next, because opinions change, the headlines change, what we see on social media and on TV in terms of Bloomberg and all the business channels. That stuff changes. But here's what shouldn't change. Your structure, your philosophy, your plan, that's what's going to carry you through moments like this in the stock market. What is your structure? Do you have a system for your money and your investments laid out? Do you know where all of your investment dollars are going every single month and the performance of those funds or those stocks where your money is going? Do you have a plan for investing consistently, regardless of the headlines? Because when you have those things in place, moments like this in the stock market, they don't feel as chaotic because you got a plan. Here's another thing you want to do. Make sure you keep your cash reserves where they need to be, where you can get to them if you need them. Also, keep your bad debt under control or pay it off. Bad debt on anything that's not going up in value. That's your medical bills, your student loan, your car payments. Make sure you're not overextending yourself, borrowing a bunch of money that you can't pay back, living way above your means. And here's the deal. If you're consistently investing for the long run, this is not the moment to break your patterns, stop dollar cost averaging, or put a hold on your system. Because the stock market going down does not automatically destroy wealth. It really doesn't. Again, what destroys wealth is the bad decisions during these type of markets. And oftentimes, it's better for an individual investor like me or you just to not do anything and just keep dollar cost averaging and putting your money in the stock market. Because you're buying stocks or index funds or ETFs at a discount. This is why I always talk about you got to have your foundation first when you're investing. Before you worry about what the stock market is doing, you need to be thinking about what's happening with the money in your own four walls that's coming in every 2 weeks from a paycheck or from a business. You need to know how your money is structured, if it's structured the right way. You got to dig into your mindset, your day-to-day money habits, your ability to manage debt and build cash reserves for yourself. And then you want to think about your investing strategy, but it's still important. I get it, but make sure you have your foundation right. Because if those pieces aren't in place, the market is always going to feel stressful if you don't have some of the basics, if you don't have a foundation established. That's why moments like this, they can feel overwhelming for so many people, because a lot of people, they don't have their foundation in place. But when you do have a foundation in place, you got all the basics covered, you can move with a level of confidence in this type of stock market. And I'm telling you now, a lot of people can't do that, right? Honestly, this is where people grow the most when you get a down stock market. Not when everything is going up and everybody's happy-go-lucky, but when the market is down. That's where millionaires are made, okay? When things get a little uncertain, because uncertainty forces all of us to look at our situation a little bit differently. Right? It forces you to ask yourself better questions about your investing. And it forces all of us to get more intentional with our money. So this is when winners are made in the down markets like this, because that's where a lot of the real progress starts to happen for most of us. What this moment should really do when the stock market's down like this is expose whether or not your foundation is solid. Not when things are going up, but right now. Do you have margin? Every time you get paid or once a month, is your income greater than your expenses? Do you have cushion and margin? Do you have cash? Do you have a plan? Or are you just reacting to what's going on, these headlines out here? So don't just look at this market as a market going down. It becomes opportunity to buy things at a discount. Look at this as a test of your system. A test of your discipline with your money and your investing. Maybe you can look at this as a test to whether or not you actually have control over your money, or whether your money is still controlling you. That's the real issue. So the stock market has gone down and it's dropped. This is what it really means. Listen, if you want to build a system for your money that's going to last in good markets and in down stock markets, check out our free webinar. It's the first link in the description box below. And right now, enrollment for our next 4-step financial reset is open. There's also a link below if you want to join us there. Listen, if you got value from this video, do me a favor, drop me a comment below and let me know. And remember, the best person who's going to take care of the old you is the young you. Until the next video, peace.